Here at Unusual Due Diligence, I've been working on a question. What is the question? Well, it is this. What are the bear market trading strategies that I should add to my toolbox? What is it that people recommend in a down market, or bear market, or just plain ugly market? Well, in this video, I am going to provide a summary of these 8 slices of the pizza. Even more, I've been working on some small but big changes to my animation pipeline, and in this episode, I'm taking it out for a test drive. Welcome to Unusual Due Diligence. I am your host, Poseidon, God of the Sea. In today's fresh episode, I'm going to take you on a quick tour of 8 big themes that I extracted from a very large number of articles, books, and more that I've immersed myself into. I'll even tell you how I did it, so you can reproduce this list. First, you need access to an ebook library, like the Kindle Unlimited or something equivalent. Next, you need to narrowly search for bear market trading guides and start reading every link that's presented. Not just one book, but all of them. Next, you need to go to your preferred search engine and search for the topic results and make it a game. How many articles can you find on the topic? As you read the books and articles online, make notes of the key themes and ideas and any tactical notes that catch your eye. Once you've done that, you'll have a pretty thick list of material. Now, you need to put in the real work of organizing that list into something meaningful to you. What are the common focus areas or themes that are showing up in the content? And once you do that, you'll likely end up with something very similar to the list I'm about to share. So why do this? Well, all the markets have retreated into fear. And it had me thinking, there's some great opportunities here. What's the best way to position oneself in these moments? What are those key ideas? And frankly, some of them kind of surprise me. Here is how the list is organized. Take a moment and imagine a road, like the road along your house. On one end of the road is a small amount of market activity, literally doing nothing. On the far end of the road, as you drive down to the other side, is a lot more market activity, meaning you are actively engaged in a market doing a lot. Okay, with that in mind, let's start with the side of least amount of market activity, and we will gradually roll our way to the most activity in the market. Now, in this video, I will not be going into the finer detail of each of these themes. Instead, I wanted to share with you my list. Here we go. Let's start with Nixon. It's a concept I borrowed. It basically means do literally nothing. Believe it or not, this is referenced as a strategy by a surprising number of bear market theorists. Next is personal growth and individual development. A common theme emerged around this idea of using the downtime to just improve some key dimension related to your trading, cash inputs, or weird online YouTube channel. Okay, next is passive returns. So this boils down generally to 3 ideas: stock dividends, staking rewards, or interest payments. Next is search and identify. This overlaps a bit with personal growth, but the idea here is to start actively searching in the market to see if you can't find new gems beneath the sea. Next up, we have portfolio management. This is a very deep topic. This gets you to ideas like if you're investing in the right sectors or if you even invested in the right kind of things. Are you targeted into inverse index funds? Or are you missing the wave on futures or some other currency pair? That'll carry us into the next concept. It's markets. What markets are you trading? The trend line may have changed in what you were trading, but now it's time to shift gears into some new asset class, new markets, or maybe just flip your approach in how you're trading your existing markets. Those approaches necessarily bring up ideas of derivatives, or what's more commonly known as option trades. For example, this may include short and long dated puts, or selling naked puts, or other options. Maybe some more complex wings on your trades are required if you're aspiring to be delta neutral. And lastly, that gets us into the mechanical. These are very specific tactical things that you can opt to do based on all sorts of configurations of the market, the setup with your broker, and tactical risk levels. Okay, that's 8. They are Nixon, passive returns, individual, search, portfolio, markets, mechanical, and also derivatives. Is any one of these the best answer? Based on my research, no. There's really no concept of a best answer because it just depends on your unique circumstances. Those circumstances are notoriously difficult to predict, but I do know this. This is Unusual Due Diligence. I am your host Poseidon. In today's fresh episode, I covered 8 ways to categorize a bear market strategy. But really, I found you could use the same approach to any market. It's the details that change under the hood. I'm working on some ways to get these details systematically organized and shared with you. In the meantime, this video contains the entire blueprint if you've time to organize your own research expedition. Make waves, my friend.